Today, we're jumping right into the anatomy of a crypto crash. We're going to look at the wild story of a project called River, its crazy rise, and its even crazier fall. We'll get into what happened, why it happened, and what some analysts think is coming next.
All right, let's just dive right in. We're going to start at the absolute peak of the crisis, a time that one analyst called a night of terror for anyone holding River tokens. You can just imagine, the market was in total shock. For a lot of investors, this was a moment of just pure panic. And this quote, it just perfectly captures the human side of all this, right? It's so easy to get lost in the charts, just lines and numbers on a screen. But you got to remember, behind every single one of those sharp red candles are real people dealing with some serious losses and a whole lot of stress. And yeah, the numbers were just brutal. I mean, think about this. Just a week after a nice little surge, the price completely flipped. It went from a high of around $66 and just plummeted all the way down to a key support level right around $13. That is a staggering drop in almost no time at all. So for the folks who live and breathe charts, the technical analysts, this wasn't just some little dip or, a healthy correction. No way. They saw the price as being stuck in what they called a suffocating downward channel. Basically, it was a sign of a total technical breakdown. The bears were in complete control here. And if you looked closer, it was like all the warning lights were flashing at once. Take the EMA death cross. Sounds dramatic, right? Well, it is. It's a classic bearish signal. It's what happens when a short-term price average crosses below a long-term one. And it basically screams that the momentum has flipped negative. When you put that together with all these other indicators, analysts were seeing a really clear picture. This downtrend was serious, and it probably wasn't over. What's really interesting, though, is that this wasn't one of those instant, sudden crashes. One analyst actually called it a boiling frog-style decline. You know the analogy? A slow, steady bleed where you don't realize how bad it is until it's too late. And that can be even more dangerous for investors, right? Because the trend just creeps up on you. This kind of suggested that the real full-on panic selling might not have even started yet. But look, to really get the full picture of this crash, we have to hit rewind. We've got to look at the absolutely spectacular run-up that happened right before all this. It's the classic crypto story, isn't it? Insane gains followed by a really painful fall. And when I say spectacular, I mean spectacular. In just the 1 month before it peaked, River's price didn't just go up, it exploded. We're talking a rally of up to 1,900%, depending on which exchange you were watching. That's a truly parabolic move. It's the kind of thing that gets a ton of speculative attention really fast. Okay, so this timeline, this really shows you just how fast this all happened. From an all-time low of $1.58 back in September, it just skyrockets to an all-time high of almost $88 by the end of January. And then, bam! In about 10 days, it's all the way back down to 13. I mean, Wild Ride doesn't even begin to cover it. So all of this just raises a huge question, right? What is River? What's the actual project behind all this insane volatility? What was the big idea that got so many people excited in the first place? Okay, so at its heart, River is what's called a chain-abstraction stablecoin system. It's a bit of a mouthful, but the big idea is actually pretty cool. They wanted to create this unified on-chain bank, a place where value could just flow super easily between different crypto ecosystems. So, for example, you could check your assets on one blockchain and use them to mint their stablecoin, SAT-USD, on a totally different chain. And the key part? No complicated bridges needed. And their whole model, as you can see here, it's designed to be this self-reinforcing loop. It's pretty smart, actually. So users earn rewards for doing stuff on the network, then they can swap those rewards for the stablecoin, SAT-USD, then they can stake that stablecoin to get even more yield, and they can even deposit other assets to mint more of it. See, the whole thing is built to keep users and their money locked right inside the River ecosystem. And hey, it was working, at least when it came to pulling in users and cash. Just look at these metrics. The project had hundreds of millions of dollars in value locked up, and it was getting close to 1 million users. We're not talking small numbers here. This shows there was some serious buy-in to what they were building. Okay, so let's recap. We've got this ambitious project, it's getting real traction, but its token price is all over the place. But there's another really important piece to this puzzle, and it comes from looking at the on-chain data. It points to a hidden risk, something lurking just under the surface. And that brings us to this really critical question. In any market, it matters a lot who holds the supply of an asset. Think about it. If just a few people hold way too many of the tokens, you've got a super fragile situation on your hands. Analysts have a name for this: supply concentration.
And with River, wow, that concentration was just extreme. On the base blockchain, for instance, a single wallet address was holding over 88% of the entire supply. Let that sink in. On another chain, BNB chain, the top holder had over 69%. Just incredible.
Now, you can probably see why this is such a huge risk. It's like a house of cards. The price of the token is basically at the mercy of a tiny group of people. If just one of those huge holders decides, you know what, I'm going to sell, even just a little bit of their holdings, they could totally flood the market. The price would just collapse, and every other single investor would be left holding the bag.
So, with all this technical damage to the chart and this massive on-chain risk we just talked about, where does River even go from here? Well, analysts have been crunching the numbers and have laid out a few possible scenarios.
Okay, so one analyst broke it down into 3 paths. The most likely one, they gave it a 50% chance, is that the price just kind of goes sideways for a bit, chops around, and tries to build a stable floor. The more pessimistic scenario, it breaks that floor and falls even further, which could trigger a whole new wave of selling. And then there's the optimistic case, but they only gave that a 15% shot. That would need a really strong reversal with a ton of buyers suddenly jumping in. And so that leaves us with the one big nagging question that pretty much the entire market is asking right now. After this insane parabolic rise, this absolutely brutal crash, and now knowing about these huge underlying risks, everything comes down to this: can that key price level hold? It's like the last line of defense psychologically. And whatever happens right there, that's probably going to decide River's fate for the near future. But as always in this space, only time will tell.